everyone. Thanks for joining and welcome back to Wall Street Bullion. Our guest today is Michael Pento. Michael is an active money manager at Pento Portfolio Strategies. Thank you for joining us, Michael.
Always nice to see you, Ivan.
Yeah, nice to see you too. I'm glad to have you back on. There's so much craziness right now in the markets, uncertainty, people talking about an AI bubble, precious metals going up. First, though, let's start off with the markets. What are you seeing right now with, a lot of people talking about this AI bubble blowing up?
Well, obviously to me, there's an AI bubble. There's an overall stock bubble too. At 220% of the underlying GDP, it's the biggest bubble that we've ever seen in stocks in the history of markets, and by a lot.
Hmm.
So what are you going to do about it? I mean, you ride the bubble higher as long as liquidity is pouring into the system. And for whatever reason, liquidity stops pouring into the system, you got to get out of this high beta exposure. Excuse me. And that includes Bitcoin too. So that's like the canary in the coal mine for liquidity. So that's exactly what I did. My model says it's time to get a little more cautious. I took the portfolio down from 40% net long to just 15% net long. We loaded up on bonds, and I increased my one short that I had. Not saying it's a panic move yet. I mean, it's not binary where you're like, oh, you're bullish, oh, you're bearish. It's not a binary event. It's just that the model is telling me, my inflation, deflation, economic cycle model is telling me it's time to get a little more cautious. And that's exactly what I've done. Again, I don't know if it's the reverse repo facility that's run dry and there's no more, excess liquidity for the bond market. I don't know if it's the end of the yen carry trade. I don't know. All I know is that liquidity is drying up.
What's the smartest place to put your money right now, Michael? Like you said, you're increasing one of your short positions, you're getting more risk averse, and you cut the portfolio down to 15% for long.
Yep.
Yeah.
Yeah. So low beta stocks is a great place to go from high beta. So you're exiting your AI and your exotic energy exposure, electrification of the system, uranium. That's kind of stuff's got to go out. You want healthcare in the portfolio. You want low beta stocks like that, defensive stocks. You want to short the market, and you want short-term bonds. So those what's working right now. The dollar seems to be okay. I'm not saying to go long the dollar or short the dollar, but want to go long USD. I'm not gonna have a problem with that. And I still own gold. I still own gold and platinum, but especially platinum. That's on the cutting. That's on the cutting the cutting board. But even silver. These very volatile and high beta metals that have some industrial exposure are getting hit too. Let's be honest.
Hmm.
The only one that's really not doing very badly is gold right now, although it's off its high.
Right.
So that's the truth. I'm not a perma bull or a perma bear against anything. So own your gold. Get ready for if this is a full blown liquidity crisis. I expect all metals to get sold, but that would be the last time, I think, for a very long time you have an opportunity to buy gold. And I would buy gold with both hands if that's the case. Because gold gets sold with everything else because people are looking for liquidity. They're looking for dollars. So they sell what they can. But then what's going to happen on the other end of that, Ivan. The Fed's going to go back to ZERP. They're going to go launch QE. We're going to have helicopter money. They're already talking about it now, and there's not even the market's down like 5% from its high, and they're like, oh, what are we going to do? What are we going to do?
Right.
You got Governor Miron saying from the Fed, we got to lower by 50 basis points.
Hmm.
You got Donald Trump wants to send $2,000 stimulus checks out. And we don't even have a problem yet. I mean, unemployment rate went up 0.1%, and people are panicking.
Hmm.
It's still very low historically speaking.
Hello, my fellow silver and gold stackers. Please hit the like and subscribe button. It will really help the silver and gold community grow. It'll help this channel grow, and I'd really appreciate it. Back to the
Historically
video.
speaking.
What are the biggest risks facing the U.S. economy today, and how do they drive demand for gold and silver right now?
Well, the biggest risk for the U.S. economy now is that we have three gigantic bubbles in equities, real estate, and in credit.
Hmm.
And when the liquidity spigot gets shut off, those things implode and it'll take down the stock market with it. The stock market can drop by half and it would still be overvalued, historically
Wow.
speaking.
Wow.
That just tells you how maniacal this bubble is. So you buy gold when they start to you own gold when there's falling real interest rates. That's when it does its best. And I expect that to happen dramatically. Once the liquidity crisis, if it comes, once it starts to end and the Fed starts really pounding the system with money and credit, um, I would expect real interest rates to plummet.
Hmm. You've mentioned before the decline of the US dollar's reserve status. How does that affect, our current market right now in gold and silver or just investment trends?
Well, that was the case that foreign corporations and foreign central banks were diversifying out of dollars. It was no longer being used as a safe haven repository for excess currency reserves.
Hmm.
So that was the case for a very long time. But in a liquidity crisis, people seek dollars, and when the yen carry trade unwinds, if that's what's happening, then you'd see the yen scream higher in value. I haven't seen that yet. So that. But if you look at the difference in interest rates between the Japanese 10-year note and the US 10-year note, that gap that spread is narrowing. So it's no longer a free ride to just go buy, borrow yen at zero interest rates and then go around the world and go on a shopping spree.
Right.
Sell the yen, buy foreign currencies, and buy their bonds and buy their stocks and buy their dividend yielding equities and making a fortune with the spread. And then, by the way, the yen was dropping in value too. So the currency translation, you make money there too. But now when you look at the spread narrowing, Japanese 10-year note was 0% for many, many years. Now it was 1.8% a few days ago.
Hmm.
So those yields are going higher because Japan is, it's an insolvent nation, but they have a new prime minister there and they're trying to just load up on more debt, more stimulus. That's all they know. So that, right now it's wrecking the yen, but if the yen carry trade starts to unwind, it's going to surge the yen. The dollar will drop against the yen, and you'll have a global liquidity crisis.
Hmm. Why,
That's a,
what?
that's a possibility. And you combine that with a reverse repo facility running dry. I mean, there's a cogent argument to be made that you should be less offensive and more defensive in your equity exposure right now. That's it. That's all I'm saying.
Welcome to the Cayman Islands, a premier offshore jurisdiction where natural beauty meets financial stability. Here, your wealth is more than secure. It thrives in one of the most trusted and respected financial centers in the world. For over a decade, SWP has been the trusted choice for precious metal investors worldwide. Our purpose-built 6,000 square foot facility sets a new standard in precious metals storage. We are proud to be one of the only vault operators approved by the London Bullion Market Association. Beyond safeguarding your assets, we're committed to making a difference in our community by supporting local causes and events that reflect our values. As we continue to expand and innovate our services, we ensure that your wealth is safe and strategically positioned to shield you from the uncertainties that lie ahead. Strategic wealth preservation, trusted today and ready for tomorrow.
Absolutely. Why do you personally favor platinum over silver at this stage? And how does, platinum complement a gold investment?
That's a tough question. I platinum and silver are you know Siamese twins. I mean, there's not much of a difference there.
Right.
I like platinum because it's more rare than gold. It's more durable. And if you look at the platinum to gold ratio, I mean, it was many, many years where platinum was more expensive than gold, and now it's been flip-flopped.
Right.
So I bought platinum. I was making money in platinum. I think I still have a small profit in it, but that's dwindling as we speak. So and I'm not one for I'm not one that endures losses very well. So if we are entering into a global liquidity crisis, a global slowdown in economic activity, platinum and silver would be in the vanguard of getting hurt the most. Copper too, base metals, energy. So I'm lightening up on those things. That's all. It's just simple. It's just that simple.
Yeah. No, you're
And
absolutely.
now again, I'm not saying that this is the end of the bull market. I'm not saying this is a liquidity crisis. I'm saying there is an incipient liquidity crisis happening, and it's being engendered by the yen carry trade and the reverse repo facility being at zero. Could that change? Could the Fed come in, with this massive, and the Treasury come with that massive helicopter money drop and turn this thing around? Absolutely. But right now we have the incipient, the beginnings of a liquidity crisis, and you could do two things. You could just close your eyes and go shopping or play golf, and just say the market always comes back, or you could proactively try to protect your profits, and that's exactly what I'm doing.
Absolutely. No, it's great advice that you gave us today. I want to thank you so much, Michael, for coming down and speaking to the precious metals community, talking about, the issues that you're seeing right now, because, it is worrying. It's very worrisome, like what we're seeing right now in the markets. You can for sure see a bubble that's, it could pop at any moment. Nobody knows, but it could pop at any moment. But I want to thank you so much for coming down. Where can people connect with you, Michael?
So the website is pentoport.com, and I have a free trial for 5 weeks. If you like it, and you get my read on the economic data that comes out, the salient economic data, and that's $50 a year if you like the 5 week free trial. And if you have $100,000 to invest and you are qualified for a long short strategy, then I will manage your money personally in the inflation deflation economic cycle portfolio, which
Nice.
monitors the second derivative of inflation and growth. So you can stay away, you can avoid recessions and sharp deflations, and you can also avoid chaos in the bond market from credit crisis. Those are the places where that's how this bubble is going to pop, one or the other, or maybe both at different times. And when you're at over two, 1.2 times underlying GDP growth, there's a long way to drop
Yeah.
to get back to a normal ratio, uh, a normal valuation metric. So be careful if you're one of those buy and holders. Don't be one of those.
Yeah.
Don't be.
No, absolutely. No, it's great advice. Thank you so much, Michael. Everyone watching this, highly recommend. Please go follow Michael's work. Go check it out. It'll be in the link in the description below. But Michael, thank you so much for coming down. As the market develops, as all the craziness continues, love to have you back on.
Thank you, Ivan. Look forward to it.
Talk to you soon.